Thank you for the kind introduction. Good afternoon, everyone. I hope you had a good lunch. I think I should be on stage, or maybe not. So, okay. As was mentioned, my name is Osahon, and I work at Ecobank. And today I'm going to speak about the future of payments in Africa. And I will start with a story. And interesting that you were talking about African solutions or problems being solved. A few months ago, in June this year, I was visiting Johannesburg again. And I had come to speak at a conference. I'd finished what I was doing, and I was in an Uber heading back to the airport, when I got a WhatsApp message from my wife, a distressed message. She is on her way to Kinshasa. She works for an infrastructure company, and she had to fly out to Kinshasa. And she was on her way when she realized that she had left her cards behind. Now, her hotel in Kinshasa, for some reason, couldn't accept online payments, so her employer wasn't able to book her hotel room or to pay for her hotel room. They had booked it. And she was concerned about how she was going to pay for things when she got there because she didn't have any cards. So what did I do? I reached out to one of my colleagues who is from DRC. And I said, listen, my wife is coming to Kinshasa. I'm trying to send her some money. Can I send you some money and then you can get it to her? He said, no problem. He was in Togo. I sent him the money using an Ecobank mobile app on something we call rapid transfer, which is a product we own that allows us to send money instantly between Ecobank affiliates, so account-to-account transfer. He received the money in a 3-minute chat. He confirmed the receipt of the money in that 3-minute chat. And then what he did was that he generated a token, an e-token, that could be used to withdraw the cash from an ATM. And he sent me the token via WhatsApp, which I then forwarded to my wife, who was then able to pay for whatever she needed to pay for when she was in Kinshasa, and she was very happy and okay, right? So we definitely need solutions when it comes to the problems that we have, and I will speak about them, talking about payments to a good extent. Let me start by, I have to figure out how to make things move. Okay. This slide is an overview of the payments landscape in the world, global landscape. And what we can see is that last year was another good year, double-digit growth, 11% growth in payment revenues, which closed at about 2.2 trillion, according to this McKinsey Global Payments report that came out a few weeks ago. So we can say that payments are continuing to grow. It is expected that this will continue for the next few years, and 5 years from now, it should top 3.2 trillion. Okay. I don't know how to move the slides. I don't know. To the next, okay. The next slide here talks about what's happening with the use of cash, right? And basically what's happening is that the use of cash is dwindling. Everywhere across the world, we saw what happened during the pandemic. There was an acceleration of cash payments, acceleration of the reduction in use of cash during the pandemic, and that has continued, even though maybe not as fast a pace. In all the different regions, as you can see on this slide, is that people are using less cash, and electronic payments are growing significantly, about 15 to 20%, depending on which region you're in. Next slide. Now, one of the contributors, sorry, please. Okay. This slide talks about the what's happening with Africa in terms of cash usage and electronic usage for payments. And what we can see is that cash remains king, and its reign is going to continue for a while. However, electronic payments are growing very quickly, so it's expected that by 2025, we will have only about 80% cash and 20% electronic, right? So it's growing. So this is a welcome situation as we try to do something about this. Now, the ubiquity of mobile money is actually being driven by the fact that we don't have a very strong banking infrastructure, right? It takes a lot to put a bank branch in a location or an ATM in a location, whereas maybe a mobile money agent is much easier, which is why there are many times the number of service points with mobile money. And Africa dominates the mobile money landscape globally. Last year, 67%, basically about 2/3 of all the value, not volume, value, of mobile money transactions happened on the continent. So about 840 billion or so of transactions done on mobile money on the continent. Now, it's not just telcos who are doing something with mobile money. Fintech firms are also disrupting the space. This is a case study of what has happened in Senegal, which is an interesting West African market, where you have a company called Wave that was founded in 2018 by two Americans who had done well in a previous startup they founded called SendWave that was for remittances. And they decided to go into the mobile money business. And they raised a lot of money, over a couple $100 million, and they built some solutions that were fit for the market. They asked people, what do you need? They figured a way to make something very simple, and they reduced the prices significantly. Orange Money was leading that market with mobile money, and they totally took over. Today, 3 out of every 4 adults in Senegal has an active Wave account. Right? So this is an example of what can happen with the innovation that comes from fintechs in the payment space. So it doesn't only happen to banks, because sometimes people think only banks get disrupted. Telcos also get disrupted. So fintech firms are doing a lot to change the payment landscape. I just gave the example of what was done with mobile money. And what they've done with banks is obviously disrupting the whole idea that you need a physical branch to be able to operate financial services. On the lending side, they've also, I think there was a speaker earlier who was talking about alternative sources for credit scoring. This is the type of thing they've done, built algorithms that allow for credit scoring. And we've even experienced some of that within Ecobank, partnering with the fintech. The merchant payment space has also been revolutionized. We have companies like Flutterwave and Paystack who've changed the game for online acquiring. And then also, even here in South Africa, Yoko, in-store, offline acquiring, they've done a very, very good job with that in terms of changing how people do things. And then also with cross-border payments, we see those types of changes as well, right? With the likes of blockchain technology being introduced to reduce the fees and increase the transparency in what people are doing with cross-border payments. So a lot is happening, and with all of these different changes, is it possible for us to have a cashless continent? It's a question that we get asked all the time and we talk about. And our regulators definitely think so. Right? Many of our regulators on this continent are very interested in reducing the use of cash for good reason. Cash is very expensive to handle, print, distribute, store. I think one estimate said up to 1.5% of GDP. So you can imagine if you can reduce the use of cash, it's a good thing. There are all these different other issues around the use of cash. And so for that reason, a number of our central banks have said that they would like to reduce the use of cash, and they have goals. And they've started doing this over a decade ago, pushing to reduce the use of cash. But for you to be able to have a cashless continent, at the very basic level, people need to be financially included, right? This is where it starts. It starts with, you have a store of value account, and then you can transact electronically. So the question is, how easy is that to happen? Here in South Africa, according to this data that I have that came from a survey of a number of different surveys, I guess it's a meta survey from EFINA, you can see that over 90% of adults have access to a financial services account, either a bank account or other non-bank financial services account. But the picture is not the same in many parts of the continent. Nigeria, where I'm from, only about half. Now I know this data is a little bit dated, but only about half of the adults have access to a financial services account. And what is interesting about this data is that you can see that Nigeria has a very, very small percentage of people who have access to non-bank financial services compared to Kenya, Rwanda, Uganda, Tanzania, who have a lot more non-bank financial services which is very often telco-led mobile money. But this picture is changing in Nigeria because Nigeria has granted payment service bank licenses to the telcos. So they're now beginning to develop their own sort of value proposition and get customers in. And of course, we have the fintechs who are doing things with mobile money and have really scaled up since the pandemic kicked off. Now, I'm going to use an example of what happened in Nigeria recently to illustrate what is required for us to have a cashless economy. So let me just set the context. I'll spend 1 or 2 minutes giving you a picture. October last year, the Central Bank of Nigeria announced that they were redesigning the naira, our local currency, changing the color of it, and by January, the end of January, everyone is supposed to change their old notes to new notes. But there was one caveat. They were not going to give you the same amount of old notes in new notes. So if I took 100,000 naira to a bank, that's for your own math, just think about $100. Go into a bank and say, okay, I want to change this money. They will take the 100,000 and maybe give me 10 or 20,000 naira in new notes. The rest will stay in a bank account and I'm expected to transact electronically. So the panic started to rise as we got closer to the deadline. The deadline was shifted a little bit, but not too much. And then finally the deadline hit. And what happened? This is the result of what happened. Basically, as consumers, people were struggling because, again, as much as Nigeria had reduced its use of cash from about 95% in 2019, according to this McKinsey survey, to about 80%, still 80% is a lot of cash, right? So what happened was people were now struggling to get cash because they really needed cash for certain things. Public transportation, buying food in the market, etc. So there were long queues at ATMs. People sometimes stayed overnight trying to get access to some cash. And then those people who were agents who had cash were charging exorbitant fees for the small amounts of cash that they were even able to give you. So consumers got onto their mobile banking apps and started transacting. They experienced lots of failures. What banks were dealing with was an increased use of their mobile banking channels, many concurrent users on at the same time. And yes, if you're like Ecobank and you had moved your solution to the cloud, you can expand your capacity, but you're still in an ecosystem, right? You still have to deal with a switch when you need to send money from your bank to other banks. And so there were lots of failures. The call center volumes went up through the roof, and businesses were struggling to accept payment. People didn't have cash to pay. Some of them failed. Even those who took POS payments with cards had long lines. The card terminals were failing and struggling because everything was going through the same infrastructure. You can imagine it. You have a couple of months to prepare. You need to scale up your systems and the servers, etc. It's not the easiest thing to do. And even the telcos struggled. In Nigeria, a lot of people access financial services through the USSD channel. And the USSD channel, owned by the telcos, had to deal with this increased traffic. And some of the telcos had to call their head offices, I won't mention any names, to ask for approval to spend money, basically to beef up the systems, right? The switches were also going through this challenge of having lots of transactions. We saw successful transactions double between December, which is a peak month, and March. You shouldn't have doubling in that period of time, but that's what happened because people didn't have access to cash. And then there were lots of failed transactions. So they were getting 3 to 5 times the transaction volume. They could not handle it. So these things that happened give us a picture of what you require for you to go cashless. You definitely need to have the infrastructure in place to handle the transaction volume because whatever was going on in cash is now going to show up electronically. And if people have store value accounts and they need to transact, then the capacity has to be there. People need to have store value accounts. They need to be financially included. They need to understand how to use these things. They need that literacy. How do you use these products? Why should you use these products? Then they need to trust them. And that trust, you can imagine the trust in banks is fractured in Nigeria after that experience because the central bank says something to the banks have to comply. People were destroying bank properties because they were very upset that they couldn't get their cash out. I mean, I had one gentleman tell me that he was leaving the country because he was starving, he was hungry, and there was no way around him that took electronic payments, so he couldn't eat. So you can imagine how frustrated people were. It was a very difficult time. The regulatory frameworks need to encourage innovation. And then, of course, you need to have partnerships between the stakeholders for you to be able to get the results you want, because payments at the end of the day is an ecosystem. There's nobody who's an island, has everything controlled by themselves. So there have been a lot of changes in the last few years that have, in the domestic payments space, you see that real-time payments have become a thing very much. In 2011, Nigeria launched the interbank settlement system, which is an instant settlement system. And I was one of the people who was very pleasantly surprised because I moved from the US to Nigeria in 2011. And in the US, I couldn't move money from one bank to another bank instantly. But I got to Nigeria and it was available. So I was very pleased about that. The US eventually did catch up with the likes of Venmo and Zelle in 2017, 2018. They then had the ability to send money between banks instantly, which is an important thing. On the mobile wallet side, I think I've talked about what telcos did, and fintechs basically have come into that space. In Nigeria, you have the likes of OPay and PalmPay, who are also spreading across the continent, revolutionizing the space. But when it comes to mobile wallets, there is an interoperability challenge that still exists that needs to be resolved. And then on the merchant payment side, lots of different changes. You have the contactless payments have been made. You can pay with QR, your Apple Wallet, or NFC type payments. And then you have buy now, pay later, and many other things that have been done. So different innovations in the domestic payment space. And for cross-border payments, there are challenges, and I feel like there are opportunities as well, right? One big challenge is the cost. Moving money across the continent, some of the most expensive corridors for cross-border payments are here on this continent. The World Bank survey, every year the World Bank publishes the cost of sending $200 between different corridors, and it was on average about 8.5% in Africa versus 6% elsewhere. So we have some way to go. The goal is to get down to 3% or lower. Then you've got this slow processing. I was speaking with one of our partners in Nigeria about her bank account, because she doesn't have an Ecobank account, has another bank, no names mentioned. And she's from Kenya, and she's living in Nigeria. And for her to send money from her bank in Nigeria to Kenya, it takes 2 days, right? With Ecobank, it's instant, but that's a different story. The currency conversion is also an issue, because some regions have had to restrict outbound. Many countries have some level of restriction. In Nigeria, you can't send money from a Naira account out. And then in some other regions, they restrict your ability to do so. And for good reason, because countries have to manage their balance of payment, right? So there are some rules in place that make it difficult for people to do cross-border payments. But there are opportunities, right? You have blockchain, as we've talked about earlier, and I think the last panel spoke about Web 3.0, cryptocurrencies, et cetera. You have the likes of the Pan-African Payments and Settlement System that was launched by Afreximbank. I think just a couple of weeks ago, Kenya joined, was the 10th country to join that network. We think that this is going to have a positive impact on cross-border trade and cross-border payments, because the plan is not to go through a third currency, so just transact between the different countries' local currencies. SwiftGo launched something for fast, low-value transactions, and there are actually significant value of transactions that are those low-value transactions between cross-border globally, about 12 trillion. And then, of course, we've got Ecobank's rapid transfer for instant interbank, or should I say, funds transfer between countries. So the regulatory landscape is changing, is evolving to accommodate all the different things that are going on, which is very welcome, because at the end of the day, the regulator is there to protect us. I heard one regulator speaking at a conference recently saying that they are the brakes. So, you might want to drive a car, but you need to have brakes, right? So that's basically what's going on. You see they're improving things with the cross-border payments, trying to do more to enhance the customer protection, and then also creating regulatory sandboxes and doing other things to drive innovation in the space. At Ecobank, we remain very committed to building a very robust payments and collections ecosystem. And we've built a number of digital channels and products to serve customers on the continent. This data is from our annual reports in 2022, and we continue to grow. And in closing, I would just like to say that I feel that it is a matter of collaboration between the different stakeholders. if we want to see success in our payments ecosystem on the continent, we need to see how we can collaborate more, because it will enable innovation. When you have banks, fintechs, and regulators and other players coming together, you have more innovative products coming out. We're going to be able to serve the markets better. They have a lot of underserved people, or I suppose mentioned earlier, 350 unbanked people, 350 million unbanked people. It definitely requires collaboration to reach them. We need to improve compliance and also have redundant processes and costs taken out by collaborating and improving things. So with that, I don't know if you have any questions, but I'm happy to hand over if there are no questions.
I have a question.
Okay.
Sorry, standing too close to the speaker. What did Nigeria do to address the problem? Because did they do any kind of regulatory corrections or changes to the digital cash split?
Okay, so essentially what happened at the end of this whole crisis that we had in February, March, was that the Supreme Court came out and said you should be allowed to use the old notes until December 31st. Now, nobody has said anything about that since, and we're now in October, heading into November, but I imagine that they will figure out a way to extend it even further and eventually come up with some idea of how we can digitize better.
Yeah. What I find really interesting is the part where you spoke about, the transfer. There's a lot that's going to transfer to digital when you get rid of cash. Mm-hmm. And I'm not sure we know exactly what is going to transfer to digital. All those little transactions, all those little pieces of the ecosystem, do we actually know what we're opening ourselves up for when we say, there's no cash now, we're moving to something else, right? Yeah. It's a massive ecosystem. And like in South Africa, our constitution is very, very direct. It says, well, you can't block someone from accessing goods and services. So if something like that happens, in the same way that it happened in Nigeria, it's going to go all the way to the Constitutional Court. And the problem with doing that is it's investment, right? So you do this, you close down cash centers, you invest all of this money, it's public statements that are made, and then you have to reverse. And that's not good for banks or for regulators if you have to reverse the position that you took. Osahon, amazing. Thank you so much.
Thank you.
Are there any questions from the audience? I see a question.
Okay.
Really good presentation. Thanks so much. Maybe a quick comment regarding the cash in circulation issue. I think we've done quite a few studies on our side as well in the context of why cash still resides in the economies. And two of the big items that we found, number one is, frankly, tax evasion. Okay, which not a lot of digital solutions solve for in the context of clients physically not wanting to have what they do seen. And that's not only at a larger level, but it's also at a micro level of spend. And in particular in our world, I think in the township economies in particular, where a lot of our cash is in circulation. The second part of it is, and I remember a use case that I was faced with deep in the Eastern Cape, buying a little packet of chips from a vendor. This is the only food I could get for the day. And only having a 50 Rand note on me and a card. And the chips was 1 Rand. Right? So I bought 50 bags and handed it out. But the context of it is, that's the scale of payment which many of us don't understand, or the micro scale of payment that happens, if you like, in remote areas where cash is very prevalent. And unless that payment is free, totally free, you will not get it out of circulation. Okay. So perhaps some thoughts just in terms of those two particular cases.
Okay. So in the case of the micropayments, you're very right that getting people to switch over to cash, from cash, see, they don't see the hidden costs of cash. So as far as they're concerned, it's free. They have the cash in their pocket, they pay for something, they get what they want, and they leave. But there are lots of hidden costs behind that. Now, there has to be a way to make people understand and appreciate that they should have a store of value account and they should use it to pay. The answer to it might involve making it free for certain size of transactions, So this would have to go, okay, you know what, you have to, and this is what we were talking about yesterday, about the zero-sum game. Nigeria has been one of those countries that has continued to push down the fees for transacting, right? So that people can afford them. And so the answer might be, okay, so very, very low value, no fee, in which case people might feel more confident. I think the other thing that people sometimes do is they need to have ways that they have access to micropayments using other forms, like your airtime, which I know my colleagues there might have some answer on how that can be done or if it's allowed in certain cases. But that's one of the things. When I visited Dubai a couple of months ago, I had to pay for my parking meter. You dial a USSD code and you pay with your airtime. That's how you pay for your parking meter. So that's how some of these things might have to be done, is using other means other than a bank account to make a payment, or a card to make a payment. Thanks.
Sorry. So my question is, we focus a lot on store of value, wallet market and the like, but you did mention that you need an interoperable ecosystem, and I think that is also a key to the game, right? So you can have wallets, but if you cannot expose the movement of that funding, and we're talking about tabletop merchants and things like that, if I cannot have that entire ecosystem that is headless and interoperable, i.e. not everybody has to be on that same tech stack or same CVP, you will never get to a cashless society, because having something sitting inside a store of value that I cannot expunge or I cannot move to the need that I need it for is also quite a big blocker that we have at the moment. I don't know if you have any other insights on that, perhaps.
Yes, I think the interoperability is a very, very crucial part of what needs to be addressed, right? And different people have come up with different models. I think there was one between a couple of different big telcos who came together and said, let's create this Mowali, let's see how we can have interoperability between these two networks. In a country like Nigeria, what has happened is that basically all the different banks, so you have around about 25 deposit money banks, but you also have a lot of microfinance banks. So what many of the fintechs who offer mobile money have is that they have a microfinance license. When they have that license, what it does is there is an interbank settlement system where they're all listed on. And so if I need to move money from a big bank into a fintech wallet, which has a microfinance license, then the money can easily move because it's on the same settlement system. So I think that it depends on the country. In countries that have 3 or 4 big telcos, there needs to be a discussion about, okay, if these telcos have mobile money wallets, how can they be interoperable with the banks so that money can flow instantly between them? There will be some rules put in place, and this is where regulators come in, developing the protocols to make it possible for such things to happen. Sometimes what happens is a bunch of banks or a bunch of telcos or a bunch of companies come together and form a consortium and say, hey, this is what we have. I think that's what happened in Nigeria with InterSwitch. They said, oh, you know what, why don't we do this? All these different people put some money in and go ahead and have this system for clearing funds between different entities. So it's very important that it be addressed, because you're right, if I'm standing in front of a merchant, the merchant has a different store of value and I'm trying to transact and I can't, then I'm going to use cash again, and that's really what you're trying to avoid, so it has to be solved.
Thanks. I think my question, talks to what you said, yesterday around central banks pushing the cost of payments close to zero, or lower and lower ways, not profitable for those participating in that space. Doesn't this come from the fact that we say cash is expensive, but it's really expensive for me, the user? Like saying direct cost, it's expensive for somebody else. But for me, when I'm transacting cash, there is no cost. So isn't it a fact that we are transferring the cost from somebody else, who might be the regulator, maybe the bank, might be somebody else, to the end user, when the end user was not paying for this thing from the beginning? And the question for me is, should they be the ones that are paying for it? If it's better for me to pay for the service in cash, and you want me to pay for it digitally, why should I be the one paying for the cost for probably your convenience as the central bank, as the bank, as whoever it is. Why do we make the customer pay?
Okay. It's a good point that you're raising, and I think it comes down to a couple of things. First, I will say that you have a cost of getting cash. Because if you have to go from your home to a bank ATM, for example, to withdraw cash, that time and transport cost is implicit in the cost of the cash that you've just withdrawn. But most people don't necessarily know this. And if you talk about someone who's completely unbanked, maybe they have the stash of cash at home, and maybe they transact completely in cash. Maybe they sell something and they receive cash payments, so they have the cash with them, right? So that's one side. But then, if they ever lose that cash or someone steals it from them, that's another cost. And it happens every now and then. Once in a while, if you lose one, maybe they have a pesky little son who comes and sneaks a note out of their mom's purse, right? Those are the types of things that can happen with cash. So there are some costs. Now, in terms of who should bear the cost, it's a very valid point, and it comes down to the ability for people to monetize data, right? Because when you think about it, I think the example was given yesterday that, oh, Google doesn't charge you for search, right? No, they don't. They are masters at monetizing data. So they know exactly what they're going to do when they get data. So now I'm back to the person who's at the bottom of the pyramid, perhaps, maybe in a township somewhere, fully in a cash economy, and you switch them to something that makes them pay digitally, and you want to bear the costs that are involved so that they can have it free. Can you monetize their data? Maybe you can. Maybe there's something about the way they transact, the things that they do that can help you be better at serving them and at building solutions that earn you money, in which case you're very happy to bear those costs. But someone has to bear a cost, and they need to have a way of recuperating that cost. In the example with the search, the big tech companies have figured out how to monetize data very well. So maybe the payment companies, the banks, and mobile money operators and all the others have to figure out their own equivalent of that if what you're describing is to become true. Thanks.
Okay. I think we're there.
Thank you very much. It's a pleasure.
That's so awesome.